Let's get across what is moving markets at the moment. Welcome back, Peter Maguire from XM. Pete, good to catch up with you again as, of course, all eyes on the US over the next 24 hours with the incoming Trump administration. What are you watching for in markets in particular at the moment?
Well, good morning, Andrew. I think it's just the speed of change. I feel as though that, President Trump's given us clear direction that he's going to hit the ground very much running. It's not going to be like the first administration. So I'm expecting a rollout as far as tariffs, what happens from a trade war perspective, how that impacts markets, US dollar strength, bond yields, what's happening with the Fed, currencies, commodities. I feel as though the whole thing is going to be a very dynamic, next for the end of this quarter and how we roll into Q2.
Yeah, absolutely. Yeah. Let's just take a look at that daily performance. What's moving, what's not at the moment?
Yeah, well, that US dollar index, Andrew, has continued its uptrend. It's running that 109, 109.50 sort of handle. Currencies have really come under some pressure. There's been a little bit of a bounce, but the US equities rallied strongly to the tail end of last week. Gold's given up a little bit of its gains, but it's still running in that 1750 sort of number, which is, very, very strong. And I think the overall mood is one of volatility, and that's going to be very much a part of, I think that's the key word, volatility. You've got, 1 week option, FX options are really, implied volatility is certainly trending north.
All right. In fact, we might bring that chart up, the volatility of FX options there, if we could. Just talk us through this.
Well, this is short term. This is 1 week, and that's as far as an expiry standpoint. And it's certainly lifted, as you're seeing from the Christmas period, that December 23. That's that number, and it's bounced strongly from there. And that's all currencies, because naturally the FX space plays a big part. It's the largest market in the world, dwarfs everything else, about 6 odd trillion a day. And that implied volatility is one that traders need to be conscious of. What's happening in short term, and again, what the long-term projections are. But you can only trade what's happening now. And that's the beauty of trading FX markets, Andrew. They're very, very transparent and dynamic.
Pete, of course, it's all been about the US dollar, that exceptionalism reflected in the US economy that we're seeing at the moment. As a consequence, you've got other currencies suffering. Clearly the Aussie. Where are you seeing the Aussie at the moment, potentially what's going to move it, and also as, of course, we head into next month's RBA decision?
Well, are we going to see a rate cut? It's currently sitting right on 62 at the moment, Andrew, right this second. Look, it's trended up a little bit better. There it is on the chart. And, you're thinking where it's going to run. I want to see, again, the impact as far as President Trump, what he does as far as US dollar, what's the story going to be there in the market interpreting it. And naturally, we're going to feel the blunt force of that, of those decision making. Is the Fed going to cut 40 basis points out, 2 by 25s? What is it unknown? Fed fund futures, everyone seems to have an opinion, and traders are some of them are sitting on their hands saying there's going to be no cut at all in 25 from the Fed. So these are all dynamics that have got to be interpreted from the market, played out, and again, the traders taking advantage of those opportunities.
Yeah, absolutely. Yeah. And how is that translating as far as movement on the equity market when we take a look at the S&P 500, Pete?
Well, it's running just under 6,000, Andrew. I gave off some of those gains. It was, it was a tremendous uptick that we saw at Christmas. The Santa Claus rally didn't materialise, but if you're looking from September onwards, it's been very, very solid traffic all the way up, really from those lows of August. And it gave off some of those gains, hit, that 57.50 sort of handle. But again, it's bounced now just on 6,000. And Friday it was up 1%. So that was a strong anticipation. Obviously, markets are shut today. Martin Luther King holiday for the states as far as traders. So we'll see how the market interprets President Trump come Tuesday.
Yeah, a lot of speculation that he's going to drop a record number of executive orders on his very first day in office. So we'll see how that transpires, obviously. Also, just sticking with equities, of course, we are in the midst of earnings season there. One particular company in focus will be Netflix. What are we expecting?
Well, Netflix, you're running about 973. It's been an enormous rise as far as value, going back to, earlier in 24, and it really pushed, all-time highs. And as the chart says, 941, there you are. And it's given up some of those gains. I feel as though we've just got to see, as far as the numbers, how they perform, and market opportunity to trade it up. It's been an almighty stock. I think it's probably hitting a bit of a bottom at the moment, and there could be further upside. But again, you've got to wait for those numbers to drop, how they're going to be interpreted from the market, and the overall theme across, the likes of NASDAQ, S&P, and of course the Dow.
So that's the focus on the States. Pete, let's now focus on Europe. What are we seeing in the Eurozone at the moment, particularly as far as economic performance?
Well, it's been soft, Andrew. That's the key driver as far as softness. So you've got that structural weakness across very much all of Europe. Germany's under the pump, the PMIs, and that tells a story there. It's really hemorrhaged, and it's not performing that well at all. So it's spluttering. And what do they want to do? Naturally, to cut rates, the impact, and they've got to deal with an aggressive president coming in, and the tariff, the impact that's going to cause, and further softness, obviously, for the euro. So that's the deal breaker at the moment. What does President Trump do as far as tariffs for Eurozone and China, of course, and how that's going to be interpreted from, the US? So I think it's going to be a bleak first or second quarter for the Eurozone.
Meanwhile, in Japan, policymakers there really trying to get some price appreciation going. How's that transpiring, just as far as the read on inflation is concerned, with speculation that the Bank of Japan may make another move on rates?
Yeah, 80% probability this Friday, Andrew. Bank of Japan making their decision under Governor Ueda. We're suggesting there'll be a 25 basis point hike, and that's what the market's anticipating. If it was to surprise and it didn't materialise, then I'm sure that the yen would come under some serious pressure and possibly take 160, 162 out, which in turn you would think there'd be intervention by BOJ. Inflation numbers, they've edged up, and the cost of living and the pressures across the whole fabric of the society in Japan is one for concern. So we've just got to see, again, big week for data drops, and everyone's sitting on the edge of their seat for Bank of Japan decision time.
And Pete, let's round it out with a look at commodities. You did mention the performance of gold. What's the likely driver in terms of its direction from here on, do you think?
I think President Trump, I feel as though naturally it's running at about that 27.50 sort of handle, Andrew. So it's bounced quite strongly to the upside. Silver's up as well at 31.20, 31.15. I feel as though you've got to wait and see what President Trump does. You've got to read the market, look at US dollar strength, and you can't take your mind off the central bank buying that you've seen across, the world for gold over the last couple of years has been, to the moon. So let's see what President Trump, I'm wearing the handkerchief because I think there's further upside, and I won't be surprised to take a 3,000 handle out sometime between now and Q2.
Yeah, all right. That's certainly worthwhile keeping a watch on for those gold bugs out there. And finally, just a quick check of oil. Once again, Pete, what are the dynamics in that market? Of course, we're seeing the ceasefire in Gaza. That's sort of put a bit of downward pressure, I guess, on the oil price, but also clearly a focus on China and US demand.
Yes, exactly. I mean, President Trump wants to drill, baby, drill, and I'm sure in those executive orders, Andrew, he's going to really, pick up speed. Wants to increase production by around, I understand, 3 million barrels a day for the first 3 years. So you're 3 years out, you're going to be producing another 9 million. You're currently at about 22 odd million barrels a day, double Saudi and double Russia. The Russian sanctions are impacting the market. The market's volatile. You've got to read politically into the play. But there's plenty of opportunity still on oil markets because they whipsaw, and WTI was down 1% on Friday. So let's just see what happens again over the next couple of days. And, rhetoric coming from President Trump. He's not going to sit on his hands, Andrew. It's going to be game on.